Zomato, and in case you're wondering why that stock has suddenly fallen, it's because of its earnings, and they're definitely sub what the market expectations were, pretty much on all counts. Take a look at the consolidated margins there at 3% versus 4.47% sequentially. So that's quite a bit of drastic dip. There is, of course, that, seems like there is an exceptional item there. The PAT couldn't have been lower by 66.5% on a sequential basis, even though it's managed to come much lower than street estimates pretty much across the board, and especially at a time when revenues have actually seen an uptick. And which is why I guess, the stock hasn't fallen a whole lot. It's not even come to Monday's lows of 220 thereabouts. So the revenues are in line. PAT, of course, is a miss, and I'm sure there is an exceptional item there. And the margins as well seem like a miss. And look at the way this stock is actually spiked up around that 240 odd mark. You're again seeing a pickup come in the stock price, and we've managed to pretty much negate that 2% cut. It's back on its way to recovery. Of course, the other key expectations, we're expecting the QCOM GOVs to see a very strong 15% kind of growth sequentially. So let's see whether they manage to match up to that or not. Maybe there could be a hit on the Blinkit margins, because on an overall basis, the operational numbers are not matching up with the street estimates. Blinkit, we were expecting, is going to post a contribution to the margins of about almost 3.7%. Maybe when we get into the nitty-gritties of the numbers, that may have fallen short of expectations. And the going out segment GOV margin, we're expecting a surge of about 120% on a year-on-year basis. We really need to dig out more details, and we will get our sector analyst as well to analyze these numbers. Food delivery GOV, we were anticipating a 6% QOQ growth, but it seems like, at least optically, looking at the first flash of operational numbers, the numbers, of course, have fallen short of expectations. We've got Pashupati Advani as well joining in on the show right now. Pashupati, there was no chance that a Zomato would continue to, chug along at this kind of pace. Of course, there seems like a one-time adjustment right now. Maybe it was on account of that ticketing business of Paytm that they acquired. We will get into the nitty-gritties. But I guess with structural stories like Zomato, it's really a factor of how much do you want to pay for the business, right? It's all about valuations.
Well, I think Zomato's built a moat, but I don't know if the moat is big enough, because there have been a whole bunch of new players that are trying to get in. And I think they're taking away, using price, they're chiseling away some of the market share. So, as they say, the jury's out. We don't know what's going to happen finally. But I think that it is, this is a space, it's here to stay. They're getting more efficient. China's been doing 30-minute deliveries for probably before COVID even. They were doing it. So there's no reason why we can't do 30-minute deliveries on everything. So, Zomato is definitely a big player, and it's here to be in this space.
Right. If you just look at the numbers, and there are some more details coming about. One is the delivery spends is coming at around 1,450 odd crore rupees when you compare it to about 1,068 crore rupees on a year-on-year basis. Also, there is a segment others under the other expense, which has actually seen an uptick, a very sharp uptick on a year-on-year basis, 1,083 crore rupees as against 590 crore rupees. So that also could be one of the reasons why that number, you're seeing a huge miss come in on those numbers. But yes, the consolidated adjusted EBITDA is coming at around 285 crore rupees as against 125 crore rupees on a year-on-year basis. So the adjusted EBITDA number is much better than what the actual numbers or calculated numbers are looking like at this point in time. So that's one of the reasons, or that could be one of the reasons why we're seeing the recovery in the Zomato stock price after the sharp dive of about 2.5% or so. Kunal, how are the charts for Zomato looking like? No doubt it is reacting to the numbers right now, and this one has actually been the one that everyone's been waiting for a good correction to creep in, which we actually saw in order to buy in the counter.
Well, yeah, I did. And, the stock, when we look at this over the last 3 months or so, from 300 levels, went down to as much as 220, 225. That was the low the stock had made, I think, previous week or the week prior to that. Now it's bounced back to that 250-ish kind of a zone. And I was looking at the intraday charts, especially on the results for Zomato. And, 50% of the volume of the day happened in just the last 15 minutes for the stock. And, the stock budged just about 2% to 3%. Moving in a band from 250 to 242 to 43 thereabouts. So that's a very mild kind of or a tepid reaction, for the stock going into the results and the results price action. Generally, after such kind of a price action move and the strong volume jump, we expect the stock to get back into at least a stable to a slight recovery, over the next few trading sessions. So wouldn't be surprised that if 240 levels are not breached for Zomato and the stock closes above those levels, we may actually see the stock recovering over the next couple of days.
Right, so that's about Zomato. In fact, the food delivery revenue has seen an uptick about 2.9% on a quarter-on-quarter basis. The quick commerce space has seen an uptick. The revenue has seen an uptick about 19.1% on a quarter-on-quarter basis. And one of the most important numbers coming in for Zomato is the food delivery GOV, which is coming at about 2% versus 5% on a quarter-on-quarter basis. We were expecting it to come in around 6%. And the quick commerce GOV is coming at around 27%. We had a poll of about 15%. So that is coming in substantially higher than what the street was anticipating, Aisha. So that could hopefully trigger a recovery in the counter, given the quick commerce is a big bet. But let's talk about quick commerce, and let's talk about all of these players actually, Pashupati, and let's talk about where do you see Zomato, Swiggy, and now also you have Zepto that is looking to file the DRHP for the IPO. How are all these counters looking to you, given the fact that the sort of a competition is only increasing?
So as you said, these people are definitely in the space. The space is getting bigger because there are new players coming in. The moat is there, but not such a big moat that people can't approach it. And so I think, the quick commerce business is supposedly the new play, and you've got Blinkit very strong in that space. So I don't know, what's going to happen, but I think it's going to be a bit of slugging, bit of losses. Price is obviously going to be one of the main factors in kicking the weaker players out. So let's see what happens. I think, give it a few months and see where Zomato is, Swiggy, where Blinkit is, and see, who's getting funded and who isn't.
We should shortly have Snehi as well come in and analyze those numbers for us as to what those other expenses actually entail. In the meantime, just looking at the Zomato stock, and as resilient as it may be, it always finds buyers on every given dip. 244 is where the stock is, so hasn't quite even stayed at the 2% cut that it fell to when the first flash of the numbers came in. Indian Hotels, that's also seeing some profit taking after an inline set of numbers. That stock is lower by about 3.25%. The other laggards today are SBI Life. Trend continues to see a cool off, 616 on the futures. That's where that stock is. There's, of course, Voltas, which is down 3.5%, Supreme Industries, Shriram Finance. These are some of the laggards in trade. Pashupati, since you do track Paytm as well, I wanted to, understand whether you've taken a look at the earnings and what you made of those.
Paytm has jumped up a lot, and it's almost touched 1,000 and has now come back to 900. I think it's consolidating here, and it's on everyone's radar screen. I don't think there's a lot of trading going on, but I think that they are making still losses. So I think that again, the beginning of the slug fight, I think, between all these companies which are doing marketplaces as well as delivery, and it's going to be messy in that space for the next couple of years. But the good thing is the Indian public is getting, having more money and having more inclination to use their services. So that's good, because their percentages as a percentage of food sales or food delivery is very, very small and could quite easily jump up very nicely. And so I think that, Paytm is also a place to be, place to nibble. But, I personally bought and sold it, and I find it very difficult to jump in again, a couple of 100 points higher. So, that's my own personal bias. It's wrong. I should change, but I haven't yet.
So that's a take coming in on Paytm, but let's take a look at Zomato, because that particular counter is now down about 3% or so, and we have Snehi to tell us exactly what went wrong with the numbers in the quarter gone by. A huge miss when you look at the numbers, the PAT, the EBITDA, or for the matter of fact, margins, Snehi.
Well, yes, so operationally, if you take a look at Zomato's quarter 3 numbers, it's a weak set of numbers coming in, because revenue is the only thing that is in line with what we were expecting at ET now. Revenue has come in at 5,400 crore rupees compared to 4,799, which is up 12.6% on a sequential basis. However, the series of bad news starts when you take a look at the EBITDA, because EBITDA has come in at just 162 crore rupees compared to 226 crores, which is down 28.3% sequentially. Net profit has taken a big hit, coming in at 59 crores compared to 176 crores, which is down 66.5% on a sequential basis and missing our polls by large. EBITDA margin also at 3% compared to 4.7% quarter on quarter, which is down more than 170 bits. So it's looking, revenue is the only thing that's in line. However, you have a PAT, EBITDA and margin miss coming in. Also key to know that there is no exception items, which means it's an operating mismatch that has come into the company or an operating fault coming in. Now, segmental revenue, food delivery is up by 2.9%, quick commerce up by 19%, going out business has done pretty well at 68%, Hyperpure is also up 13.4%. What is ailing the EBITDA this time is advertisement and sales promotions expenses have come in at 521 crores, which is up 24% sequentially. If you take a look at the GOV from the press release that the company has got out, the B2C business GOV is looking healthy at 57% year on year. Food delivery GOV is 2% higher compared to a 5% poll that we had. So that number has missed, and they have also flagged off some demand slowdown when it comes to the food delivery business. However, what is done well is the quick commerce GOV that's come in at 27%. We were expecting 25%, so that's looking good. Going out GOV grew 35% quarter on quarter, and like for like also it's up 15% quarter on quarter. Hyperpure revenue has grown up 13%. The EBITDA drop they have attributed to investment in expedited new store openings and new customer acquisition in the quick commerce business. Moving on to Blinkit, some very positive news coming in for Blinkit, because Blinkit store count has crossed the 1,000 mark 1 quarter earlier than guidance, and now they're aiming for 2,000 stores by the end of FY25, 1 year earlier than the earlier guidance of FY26. So very positive move coming in from Blinkit. At least demand slowdown has been seen in food delivery, and District and Bistro apps have been launched by the company in Q3. That's the lowdown. Operationally looking weak, but it's the quick commerce business and the commentary for Blinkit that is looking very positive for Zomato.
But Snehi, to add to that, they've also mentioned that they're likely to operate in losses for the next year or so. What could that be on account for? I mean, is it a structural downturn in the business, or is it just going to be more aggressive acquisitions that would actually, suck up liquidity?
Absolutely. So it is the acquisition front that the company has attributed to their rolling out of campaigns on Blinkit. When you take a look at the festivities that are coming in, or marketing campaigns, ad spends, that is something that has gone up incrementally by more than 20%, rather 24% on a sequential basis. Depreciation numbers have shot up, which is why operationally, if you take a look at these numbers coming in, especially on the EBITDA and the PAT front, it's a big miss coming in from what we were estimating here at ET Now.
All right, so that is all about Zomato, the numbers, the commentary coming in from the management. They are saying that, I will quote from the shareholder letter that they have, that we are likely to operate in losses for next year or so, but we do not expect them to be meaningful in the overall context of Zomato. That is the commentary coming in from the management. The stock right now is down and out in trade. It is down approximately 4.5% or over 4.5% as we speak. So let's watch out for that, and let's get in more insights as we go by. But let's move on, and Naresh, let's talk about how is actually Swiggy looking to you on the charts. I know it's a very recently listed counter. The chart history will be limited. Anything that you can help us with?
So technically, you would be watching out for the opening day lows, which is 400. Till the point that 400 to 470, the first 2 days, that was the range. So till the time it holds above 460, 470, the bias remains positive. But for now, not much of a data, but it only gets weaker once it's sustained below 460.
All right, so that is about Swiggy and Zomato, and also Paytm. We've spoken at length about these counters, but let's move on and let's talk about what exactly is happening in the entire auto space, Kunal, because this particular space for the week or for the last, or rather this year itself, has not been that great coming in for the auto sector. What's your take? What sort of a chart are you looking at for the auto space in particular?
See, I believe that this trend for the downside would continue for auto stocks at least for the next 1 or 2 months, because such kind of a move for the auto index, or which generally happens for sectors, which takes the index all of a sudden down towards a zone where these indices of these sectors go into a high comfort zone, or much more relatively strength zone, towards a point where these stocks in the sectors are into a huge underperforming spree. That generally takes a process of at least 1 to 2 quarters. We've completed 4 months, 3.5 months of this price correction for these auto stocks. My belief is that potentially another 2 months could be in the offing, where many of these auto stocks could probably try and make a very consolidative kind of a low for themselves. So I would not be in a hurry to try and jump and buy into these auto stocks, especially the ones which have been beaten down. It's always better to try and buy the stocks which have been relatively strong. So I think in that sense, M&M and Eicher Motors continue to be the strong names.
6% cut now on Zomato. I don't think the street was factoring in that the losses are going to continue for another year or so, aggressive as it may be in trying to garner more market share and therefore a higher discounting strategy, other than, of course, extremely aggressive on, capex and acquisition front. Almost 7% now on Zomato. That's the kind of fall that you're seeing. So that smidge of a bounce that you actually saw is getting undone very, very fast, 7.5%. And now it's almost in a free fall situation. That's Zomato in trade for you, 230 and still counting lower as we speak right now. The market will, of course, try and digest what the commentary from the management is, and then perhaps assign and subscribe a fair value to the stock, which was kind of looking overvalued. 230 now on Zomato and still counting lower as we speak. The other ones, of course, are, an idea which is holding up. There's, of course, Kotak and Wipro as well, both earnings reactions. But Pashupati, analyzing the earnings so far and how mixed the count has been from a Kotak on one hand and an Axis disappointment, which we saw on Friday, what are you anticipating from the entire private banking space? Because the market has been once again pinning its hopes pretty high on what the financials are going to do from here.
Well, obviously the two jewels at the top of the private banking space are HDFC Bank and Kotak, and they've continued to do well. HDFC Bank rolled up and now rolled down, and now I think it's rolling up again, but it's floating between 1600 and 1800. But they are feeling some pressures on their bottom lines because of some margin pressures are there, and that's coming from fintechs who borrowed from them, from other places where the payments are coming a little bit slower. So I personally am not so happy with the banking sector, though if I wanted to be in banks, and since financials are a large part of the index, I would definitely be in the top two and not be even in the next tier like Axis. And, RBL also had horrible results last week. So, it's not such a good space to be.
Okay, pretty tentative. And then, of course, this hit on Zomato. But, we're going to wind it up right here on this edition of Closing Trades. Pashupati, great to have you on the show. Kunal, Naresh, we'll let you both as well go on that.